Well, it's been a seesaw 2 quarters for the stock market, so what are advisors telling their high net worth clients right now? Peter Mallouk is the president and founder of Creative Planning, which has $36 billion in assets under management, and he joins us now to discuss. Peter, thanks for joining us. And let's just start right now with the most common concerns that you're hearing from clients right now, because it does feel to some extent like the rebound that we've seen in stocks over the last quarter is still kind of in the backdrop of what people are really remembering, which is the decline that happened at the end of 2018.
That's exactly right. I think that if we look at our higher net worth clients, they seem to be very concerned about this pending recession. They're so convinced now that there's going to be a recession because it's been such a hot button in the media of late. So we went from the inverted yield curve to the Federal Reserve raising rates to not raising rates, the tariffs with China. And so there's been so much talk of a recession that a lot of clients are asking us about it, and they're very focused on the market cycle, the business cycle, and everyone's very aware that things don't go straight up. They move in a cycle, and things are good now. We have low unemployment, so everyone's looking ahead, trying to figure out when we're going to have that next downturn, and that's a very big focus of conversations today.
Now, from your point of view, does it feel like the market or the economy are heading that way? Because at least at the U.S. economy, while it certainly appears to have slowed down a little bit at the beginning of 2019, it is hard. You really have to squint to try and find some signs of an impending recession.
That's right. And if you look at the predictions around recessions, and we're actually writing a newsletter about this, it's very entertaining because everyone tends to pick, the prognosticators and economists always pick 6 to 18 months out. It just never really looks like it's right now, but we want to put it out there far enough that maybe people won't notice if we have it wrong. And they're always adjusting out. The reality is this is going to be very, very hard to predict. By the time we realize that it's coming, it will be too late to react to it. But that there is just too much that goes into an inverted yield curve and when it inverts and how the global economy works together. If we look at the United States, things still look very, very good. And I think most people recognize that. And the question is just, when is the party going to be over? When is that going to happen? And that's a guessing game. It's a loser's game. It's not really a way anybody should be managing money or making decisions around their portfolio.
So Peter, on the one hand, you're saying that your clients are thinking that there's a recession, which sounds negative, but might be a bullish sign. On the other hand, you're saying everyone recognizes we're doing really well, which sounds positive, but might be negative. I'm playing both sides of the coin here. So what does this mean? I guess it leads me to the question, what does this mean for valuation? What does that tell you about how equities are priced right now?
Well, I think to your earlier point about the negative and positive, if you ask these very same people how they feel about their job, their future, if they're business owners, if you ask them, what do you think your business is going to be like later? How's it going to do a year or 3 years from now? They're extremely bullish. It's only when you ask about the public markets or the market cycle that they're worried that the recession might be coming. And I think that's reflected in valuations. If you look at how good things, if you just beamed somebody in from outer space and said, listen, unemployment's below 4%, it's been there for a long time, shows no signs of letting up. It looks like we're going to work out a deal with China. We've got a Federal Reserve that's very cautious about every move that they make. How do you think the market's going to do over the next couple of years? That person would say, really, really well. And I think that here we're bombarded with these narratives and these cycles about what's going to drive that next recession. And you have these little market hiccups. And I think they're healthy and they're keeping valuations in check. So for the disciplined investor, despite all the wonderful things going on, we don't see an overvaluation of securities.
So we've been talking a lot about companies that are coming to the public market. Most recently, we had Lyft. Now we've got Pinterest on their roadshow. But you're actually looking for exposure for investments outside of the public markets. Why? And what are those? And are those even something that a regular retail investor can get into, or are those just for a high net worth client?
Right. Well, we love the public markets, and that's the core of all of our portfolios and the way that we give advice. But higher net worth folks do like to have private investments in their portfolio. They want access to private equity, private lending, private real estate. And it's really not an appropriate investment for somebody who has $500,000 or $1 million. Really, in that kind of portfolio, you start with the basic building blocks, which are stocks and bonds and maybe publicly traded real estate and other investments that may be publicly traded. And you only really look for these alternative investments, these illiquid investments, if you can afford to be, not have to access that money for a long period of time, but you can be rewarded if you're willing to take that 5 or 10 year horizon. I know our higher net worth clients are very focused on diversifying that way too.
Peter, we're kind of talking now about the process of saving for retirement, but when you think about actual retirement, folks that are approaching that retirement date, what's kind of those conversations like right now, especially some folks who may be coming right up to the beginning of a retirement period? I mean, these are people who have seen 2 really nasty periods in the stock market within the last 20 years. What's that client base looking like for you right now?
I mean, you're exactly right. People approaching retirement start to get very concerned about how should I change my portfolio now, because we had 08, 09, we had 9/11, we had the tech bubble, and I don't want to retire. And then the next week have everything fall apart, and then I've got to go back to work. And if you've got the proper portfolio design, you really don't have to worry about that. Retirement is not the end of the portfolio. It's actually really the beginning. Even somebody retiring, they probably have decades more with us, right? And so you're talking about this portfolio needs to go 20 to 40 years, sometimes longer. And a portfolio like that should not be ultra conservative. It should be conservative enough to meet your needs in the short run. But over the long run, we really need to have stocks and maybe for the higher net worth investors, like we were talking about earlier, where appropriate, some alternative investments. But there's this inclination to get more conservative than one should be just because they're about to retire. So
talking about being a little aggressive in a area that's not exactly traditional, and that would be crypto investing. And you recently said that crypto is actually speculation. So it doesn't sound like something that you are putting clients into. Did you feel compelled to come out and say that because lots of people were asking you about it, or just because you've been watching what's happening?
No, I mean, the first letter I wrote on the topic happened to be the week that Bitcoin and a lot of its counterparts peaked. And from that point on, it's been basically in a free fall. And interestingly, a month ago, I was asked about it, and the day that Bitcoin hit $5,000, they decided to release that video, and it's always just creates this storm on social media, every time I do that. So thanks for asking about it. But no, I'm not a fan of crypto. I think, is it possible that several of the cryptocurrencies are going to prevail? Is it possible one of them could be Bitcoin? Of course it is. No one knows for sure what's going to happen. But of the thousands of cryptocurrencies, is it most likely that the vast majority of them are going to fail? And by fail, I mean, the definition of fail here is not that it goes down for a little bit and comes back. The definition of fail is it goes to zero and you lose all your money. I think that's the outcome for the vast majority of these. And therefore, it's just a speculative marketplace. And as long as you've got the, hey, I'm going to gamble money, the speculative money, well, God bless you. Go have a little bit of fun with it. But certainly shouldn't be a 10% or 20% allocation of a portfolio that you're trying to pay for your kids' college with.
Now, when I think of crypto, I think of younger investors who, believe the stock market is a casino and they don't want any part of it. But when it comes to younger folks you're talking to, younger folks that you're working with, what are some things you're seeing from the, let's say, under 35 set that are encouraging, discouraging? What are some kind of trends that young people maybe need to keep in mind as they begin the process of saving for retirement?
Right. I think that young people are very skeptical about everything. And I actually think that's a very, very healthy thing. And they really should be. It's forcing a more transparent society. It's forcing politicians to get more transparent. It's forcing businesses to get more transparent, which means they're getting better. I think that's a wonderful thing. But this idea that, the way your parents invested is stupid and the stock market's dumb and bonds are rigged, that's crazy. Okay. That's about as transparent and an efficient way to invest as you can possibly have. Far more transparent than investing in your buddy's cannabis place down the street or trading penny stocks online or buying, cryptocurrency number 2,412 that just came out last week that somebody created in their basement. That's far less transparent. And my message to them when we meet them, and there are a lot of them that are very focused on becoming successful over the long run. My message to them is very simple. The number one thing that benefits a young investor, the number one is time. And they have that time. By the time most people figure that out, it's too late. They're older. If you've got time, you are going to be able to accomplish everything you need to do. If you're 20 years old, you just save $5,000 a year, you're going to be a millionaire by the time you're 65. If you're 60, you need to save over $160,000 a year to do that. Time is really on the side of the young investor. even if you just throw $5,000 a year in the S&P 500, let's say we earn less than the historical average, just get 7% a year, they're millionaires. They don't have to do anything else by the time they retire. So the one way to screw that up is to invest in things that go to zero. So that's okay if they do that, but I would start by just taking that first basket of money, that first amount of money they're willing to invest, and put it in things that we know over the long run have a high probability of reflecting what's really going on in this amazing economy, and that's owning the big American corporations, Google, McDonald's, Nike. Just buy it through an index, hang on, and you're going to do better than most of your peers.
All right, Peter Mallouk, founder of Creative Planning, thanks so much for joining us.
Thanks for having me.